Michael Farr joins us now to talk more about trade and the markets. He, of course, is president and CEO of Farr Miller in Washington. Michael, always good to see you. Thanks for joining us tonight.
Thank you, Bill. Great to be with you.
Does this deal in any way get you to look at the markets in a different way?
If we have a deal, Bill, I mean, so much of this negotiation has been Lucy promising to hold the football for Charlie Brown and Charlie Brown trusting her and ending up flat on his back. There's been a little bit of that for markets. When you hear Bob Lighthizer, who's an old friend, say that we're really there, I feel better about it. What I like for stocks is it does seem to be removing more and more uncertainty, even incrementally. So I think it gives a more stable platform to these negotiations. It's going to quiet some of the noise, and investors are going to be able to focus a little bit more on the numbers, on earnings, and on what makes stocks valuable.
Michael, would you be stepping into some of the names that have suffered because of the length of the trade war?
I think so, Sue, but not necessarily with an idea that they're somehow going to rebound all that quickly, because this still promises to be a long process. But I like to buy things when they are beaten up. So for those very good companies that have suffered, you know, you buy them when folks don't like them. You try and buy them when they're cheap. A lot of them have become a lot less expensive. So there's opportunity there. And yes, I am looking at those.
You're getting phase one now of a trade deal. You've got the Federal Reserve, which pretty much signaled this week that they're out of the picture for the foreseeable future. And you've got the stock market at all-time highs. Is it too good to be true, or what are you looking at going into the new year here?
You know, Bill, I've been doing this so long. Anytime everything feels good, I get even more nervous. But yes, at 17.5 times earnings, stocks aren't cheap, but they're not awful. Earnings growth for 2019, maybe 1.5%, really. 17.5 times earnings. The economy's doing okay. The Federal Reserve says they're going to be on the sideline for a while. And we know in an election year, the Fed doesn't want to do anything. So you get past April or May, Fed's quiet, interest rates are low. This is a constructive, bullish environment for stocks. So yes, I think it could continue to go along. I don't expect another 25% year, but a positive year for 2020. Yes, I'm reasonably bullish.
All right. Michael Farr with Farr Miller in Washington. Always good to see you, Michael. Thanks.
Great.
Have a good weekend.